I don't know who needs to hear this, but when your grandmother who can't use a computer asks you if it's a good time to buy Bitcoin, this means something is coming in the market. This is precisely the alert to take action. It means something big is about to move. In this video, I'm going to explain how you can avoid losses and also take a look at two of the simplest strategies you can adopt during a bear market to protect your money. Welcome back to BeInCrypto. My name is Jessica. Guys, if you haven't yet already, subscribe. We bring you these videos several times per week. Now, first, before we get into the video, I want to show you why the markets have such dark periods. The reason is really interesting because knowing it actually gives you an advantage over other investors. So the market follows cynical behavior, and in the cryptocurrency market, we had a peak of euphoria in May, which was when the crash occurred. We can explain this cycle with the concept of market cycle psychology. Now, this is where we slowly see a rise of that optimistic feeling. We all know what it means, where we start to make money and we believe we're the best traders in the world, going through euphoric periods and even considering buying that dream Lamborghini car. This is when the mass media covers the profits, and this is when your grandmother, your neighbor down the street start asking you for financial advice. Now, this is where few of us realize the cycle is about to be reversed or the bubble is about to pop, and we go through many negative feelings then, such as anxiety, fear, panic, and depression, where for many it's just a little bit too late. They've already lost most of their profits just to get back to the starting point of optimism and repeat the cycle all over again. So in the past few days, we did see prices fall again, and the direction of Bitcoin now is kind of uncertain. I know you're wondering, what do you do when prices keep on falling? So this is essential for you to know how to manage risk if you trade and if you invest in cryptocurrencies. The first thing that you should do is to take into account before investing and trading, and not only when prices begin to fall, but from the beginning, you should know how much of a percentage of your capital you can lose without harming your personal finances. So managing risk is key. It's so important just to assessing how to be successful as an investor and also as a trader. The amount of money that you're willing to lose is called risk capital. So think, how much would you be comfortable losing today? $10? How about $1,000? To get the best out of this risk capital, you have to assign a loss tolerance to it as well, to further manage your risk and survive in the long run. Because even if it's money you're willing to lose, it doesn't necessarily mean it's money that you're going to risk. Everything in a single trade just to deposit again the next day and start all over again. That as a trader is not a sustainable strategy. So based on the example where 15% of your equity is risk capital and then you use it to trade constantly, your investment portfolio, for example, is $100. Your venture capital would be $15. So you have to assign a tolerance of loss per trade to these $15. It's recommended it be less than 3% of your risk capital trade. So how would this look? So from the total of $15, you can only afford to risk 3% per trade, which means that for each trade, you have to adjust your stop loss so that your loss is no more than 45 cents on the dollar. It does sound like a little, and you may want to risk a little bit more, but only do it if you're comfortable and if you know what you're doing. The idea is to survive any market, bullish or bearish, is to safely manage your risk. This way you can protect yourself from excessive losses when there's a sudden drop or rise in the market, which is really common in cryptocurrencies. So that remember, with every good risk management practice, the moon is the limit. Now we're going to go through some of the most common industry strategies. Some might sound familiar to you and some might be fairly new. Now, speaking of survival, what many traders do in a bear market is to decrease the size of their portions by simply not trading. Let's look at two of the most popular strategies to minimize some risk. The first, guys, switch to stable coins or stable currencies. These are assets that don't increase or decrease in value, and instead of losing value in the market, they actually maintain it pretty well. Stable coins, as their name suggests, are assets of value are fixed to another asset, commonly fixed to a traditional fiat currency like the US dollar. So the most popular would be Tether, USDT, or DAI. Now, switching your earnings to a stablecoin not only reduces risk of long-term losses in the longer term, it also maintains a value of your portfolio. And this allows you to freeze your earnings until the market stabilizes and you decide to operate again. The trick here is to know when in the market you should switch to stablecoins, as to not risk the value of your portfolio. So remember the market cycle psychology and listen to the opinion of some more experienced traders. Another common strategy is to hodl. At some point, you may have read the words on social networks and you're kind of wondering, well, what does it refer to? Hodling consists of staying. That's it, it's easy. Under no circumstance do you sell. Have you ever heard the term paper hands or lettuce hands? Those are the people who sell out of panic and can't bear to see losses in their portfolio, no matter how minimal. So while someone with diamond hands or steel hands is a person that doesn't sell their cryptocurrencies, nor will sell for quite a long period of time. Now, if your strategy is to make profits as quickly as possible, you may find it useful to sell and buy in short periods of time to take advantage of the other opportunities, regardless of the market trend. But if your strategy in the long-term price fluctuations, you shouldn't worry too much. So today we've covered quite a lot. We've talked about how to manage your risk, how to protect yourself with stablecoins, and the concept of hodling. I want to ask you guys, what are your recommendations for surviving a bear market? And do you think the worst is out of the way? Let me know in the comments. And if you are looking to get started, you can always look at StormGain, which is BeInCrypto's partner cryptocurrency exchange. The link is down in the description box below, and you might get a cashback promo on your very first deposit. Guys, that's all for the video. Thank you so much for watching. If you enjoyed, give the video a like, and if you haven't yet already, subscribe to not miss any more content like this.